This week was rather mixed, but it was in the name of Solana meme coins, especially Bonk. The question is, why is Bonk up? Who's buying here? Who's selling here? Is this a sustainable rally or a pump and dump? Let's have a look at the data most people are not considering. Let's try to figure out what's going on here. So this is the price development this week. We're up almost 30%. At the same time, Solana went down slightly by 1.5%. So this is clearly a rally idiosyncratic to Bonk itself. Bonk is the second largest meme coin on the Solana chain. At place number 1 is the Trump token. I would not be surprised at all if Trump was to lose that first place and if Bonk replaces that. And the reason for this is token inflation. In the future, we will see more and more Trump tokens hitting the market. That will likely depress the price because the founding team is selling off. That will then, of course, reduce the market cap of Trump as well. Thus, Bonk can take its place. So maybe the rally is already in anticipation of Bonk becoming the number one. What we've got over here is a price chart you've probably not seen before. This is Bonk relative to Solana. So not in US dollars, but relative to SOL on a logarithmic scale. In other words, we can see how much Bonk underperforms or outperforms over time. And interestingly enough, it tends to be in a somewhat stable trading range. We've got these massive rallies and subsequent declines. This here is a drop of 70%. This here is an increase of more than 200%. And since February of this year, the price is stabilizing relative to Solana. This here is the recent rally. Now, I'm not saying at all that those kind of lines have to mean anything, but sometimes they do become self-fulfilling prophecies. And enough people agree that the price could be high at a particular point in time, then the selling happens. And the selling triggers the price decline. So things become reality just because the market as a whole is agreeing, not necessarily because anything fundamental is going on. The potential reward, in case we break out of this resistance, is 88% relative to Solana, and the potential risk is a drop of 31%. On the Solana chain, we've got almost 1 million holders of Bonk. To be more precise, it's 945,292 wallets that have some Bonk, but not all of those wallets are created equal, right? Some of them might just hold a few cents worth of the token, arbitrage bots, for example. Others might hold hundreds of thousands of dollars worth of the token. It looks like this month, the number of new traders that interact with the token tends to be on the rise. Over the very long term, though, the US dollar trading volume on the Solana chain has still not recovered. We had days in the year of 2023 where there was more than $100 million worth of trading volume. Now we are going up slightly again a bit, but still, it's less than 10 million in total. Also note how the trading volume is split up across different wallet cohorts. We can normalize this to 100%, and then we get to this chart. Most of the time, it's a small retail investor that dominates the trading. It looks like the price discovery for Bonk, though, does not happen on-chain anymore. It seems like the trading volume has moved to the centralized exchanges. Because have a look at the trending tokens on the Solana chain. Bonk is now at place number 57. There's only 160k worth of liquidity. All the leading places where Bonk is traded is centralized exchanges. It's not on Radium, it's not on Orca, it's not on the DEXs. That's true for the spot volume, it's also true for the perpetual futures. Now, most of the time, the perpetual futures traders are betting on rising prices. So the longs have to pay the shorts in order to get more price exposure. Or in other words, the funding rates are positive most of the time. This is green. There's a strong correlation between the open interest on the perpetual futures and the spot price. As there are more and more bets on Bonk, the spot price goes up as well. As there are less bets, the spot price goes down. So very likely in the future, we will continue to see this expansion and contraction of credit in the token. Because that's the fundamental difference between buyers on the spot market and buyers on the perpetual futures market. People get into a token via the perps in order to get levered exposure. Even though the financing costs can be very high, they can be 10% or more per annum. It's much more expensive than just traditionally levering up the position. But people do this because the spread is very narrow, so getting in and out of the token quickly is very cheap. And so if you're trading very quickly, if you're trading often, and if you don't have long-term interest in a token, you rather go with perpetuals than with the spot market. And seeing the price getting moved that much by the perpetual futures, I think is a strong indication that we will see these pump and dumps in the future as well. The price always moves in the direction of maximum pain. So when enough people bet on falling prices, we see it shooting up. When enough people are betting on rising prices, we see a crypto crash. And so whenever we are very high in the Bonk price, this can be an opportunity to short. Is it now the perfect time to bet on falling prices of Bonk? Maybe, if there is a very tight stop loss, because this is a potential turnaround, but you do not want to be in the short when we see an additional secondary rally. Some people are already starting to bet on falling prices. We do have negative funding rates again, but let's see where this is going the next days. If the price can't rally further, we are likely going to see a continued deflation as we saw at the end of May of this year. If we break through the resistance, then the deflation will probably happen somewhere around here. That's then the ideal entry opportunity for a short. Does it make sense to now buy and hold Bonk over the long term? I'm not so sure, because again, the token is mainly driven by short-term credit expansion and contraction. Now let's take a step back. There's some interesting news happening with the money supply. The money supply is at all-time highs. And while this is not great for the average person, it is of course good for investors, because as there's more dollars floating around, prices tend to go up. Have a look at this chart. You've probably never seen this before. This is Bitcoin relative to the money supply. So we divide the Bitcoin price by US M2, and we've got a curved line over here that, interestingly enough, connects the bottoms quite well. It gives us an idea of how much Bitcoin could potentially fall right now. The potential risk is somewhere around 60%. I'm not saying that we're going there anytime soon, but it does make sense to have some risk diversifiers in the portfolio as well. Now, besides the monetary expansion, another reason why Bitcoin tends to go up long-term in US dollars is simply because of its shrinking liquid supply. What we see here is the Bitcoin that hasn't moved for the last 5 years. It's almost monotonically increasing. 30% of Bitcoin has not moved over that time period. Thus, the Bitcoin that's available for trading tends to decline over time. On top of that, we've got all of that demand by the Bitcoin ETFs. So that launched in January of 2024 over the course of 1.5 years. 3% of Bitcoin supply got acquired by Wall Street. So roughly an acquisition rate of 2% per year. And so when a lot of Bitcoin doesn't get moved, and that tends to go up over time, at the same time we see purchases by Wall Street through the ETFs, and the token inflation of Bitcoin is rather low with 0.8%. We of course have to appreciate in US dollars long term. The inflation rate of BTC is 0.84%, and in 2028 this will drop to 0.41%. And those kind of effects are the reason why this line goes up over time, despite those crashes we see every now and then. Now, on the face of it, it seems very positive that Wall Street continues to accumulate Bitcoin, because they're basically pumping our bags, right? They push up price through the demand. However, the issue is with that acquisition, the correlation of Bitcoin with other risk-on assets also goes up. So now when we see a stock market crash, we are more likely to also see a crash in Bitcoin. And the reason why this is a problem is the valuation of stocks long term. Have a look at this. This is the S&P 500 relative to gold. So this starts in 1885, a very long-term chart with massive volatility. Stocks are historically rather expensive now. And if you go back to an average level in the past, we could easily see an underperformance of 65% or so. Or have a look at the S&P 500 relative to the future earnings. So this is the Shiller price earnings ratio. It's a 7-year moving average of the PE ratio of the S&P 500. Again, a very long-term chart. It starts in 1871. This here is the Great Depression. This here is the dot-com bubble crash. This is the global financial crisis. And again, we are at historical heights. And if you go back to normal levels, we could easily drop by 50 or 60%. Now, why am I suddenly talking about the stock market? It's because things are now intertwined, right? Bitcoin has an influence on all of crypto, and now stocks have an influence on Bitcoin. Actually, when we go back to the very beginning of Bitcoin, how Bitcoin started, the very first block was mined with a message referring this newspaper article. There was an article discussing the bank bailouts. So that was the discussed issue at the time, right? Taxpayers' money is getting used to bail out Wall Street. Bitcoin got launched over here. The very first block was mined in January 2009, at the height of the global financial crisis. So during Bitcoin's history, stocks saw nothing but an appreciation. This is again stocks relative to money supply. But we can look at the same thing with stocks relative to PE or stocks relative to gold. Bitcoin has only seen positive times. The last 16 years had been incredibly bullish for investors. And so that is what worries me to a degree. That's why I want to generate returns as quickly as possible. We don't really know what's going to happen during the next financial crisis. Could Bitcoin potentially fall much more than it has ever done in the past? Could it maybe not just drop 60 or 70%, but maybe again 90% or even more, 95%? Who knows? Again, during Bitcoin's time, we've never really seen a real crisis, a real liquidity crunch. Right now, Wall Street doesn't hold a lot of BTC. Right now they're still in the minority, but as time goes on, they own more and more of the asset and thus have more impact on the price potentially during a crisis. So I'm thinking about this opportunistically. I want to pull out as much capital as possible out of the system before we potentially could see an implosion. I'm not saying it will happen. I'm just saying that in the past we had our massive crises, and these crises could spill over to crypto as well, in magnitudes most people are not anticipating. Now what you see over here is the long-term performance of these small altcoins, and this is how most people try to benefit from the system. If Bitcoin doesn't grow that quickly anymore and we want to make money fast, let's just buy these small altcoins. But the issue is that most of those altcoins perform very, very poorly, right? This is the performance in the last year, and in the last year Bitcoin actually went up by more than 60%. So buying those small altcoins is a recipe for disaster as well. But we can do the exact opposite. We can short the altcoins, and we can do this relative to Bitcoin or relative to Ethereum, and then we get a performance like this. The altcoins underperform because all of those insiders are cashing out, right? There's new tokens that get issued, maybe early investors that get vesting unlocks. And because of all of those additional new tokens and because of so many new projects launching all the time, the altcoins on average go down quite quickly. But again, if we bet on them going down, we can make money fairly fast. Here's my P&L over the last 2 months where I traded on falling altcoins. I started with 40K, made now more than 25% return already just in 2 months. And our community is doing the exact same thing, right? The individual trades make very nice returns. But really, it's about the long term. It's about compounding money fast enough. Crypto is very volatile, thus it's high risk. If we've got a lot of risk, we also need the returns. If the returns are only 1 or 2% per month, maybe 10, 20% per year, that's not necessarily enough. Maybe it's okay for Bitcoin, but it's definitely not enough for holding altcoins. My target when doing those relative valuation bets, when betting on falling altcoins, is a performance of 10% per month. Yes, I know this is risk on capital, but again, I'm also hedging this with, for example, buying gold at the same time. So I want to be risk on in crypto, and I want to be risk off outside of crypto so that it balances out over the long term, but still I take advantage of the inefficiencies of the crypto market. Because this is obviously inefficient, right? The market is going down all the time for these small altcoins. So if you want to copy trade me, if you want to learn how to set this all up, how to also properly manage your risks, then feel free to check it out. It's currently $125 per month. A link to premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. Helps the channel grow. See you next time on YouTube or see you in premium. Cheers.